Hey guys, hope you are doing well during this time and everyone's safe. Wanted to send out a quick video. I've been getting a lot of calls, a lot of emails around forbearance recently. So wanted to kind of touch base on what it is and talk about what impact it could have on a mortgage. So if you don't know what forbearance is, it's pretty straightforward. During COVID-19, they initiated the CARES Act, where if you have a loan that is backed by Fannie Mae, Freddie Mac, or Ginnie Mae, FHA, VA, government-backed loans, then they're required to allow forbearance. All you have to do is contact your servicer, and you don't have to provide any documentation. Just state, due to COVID-19 hardship, you would like to be placed in forbearance. So with that, a lot of people are taking advantage of it for good reasons, and some just to get out of making payments for 6 months just because they can. Some people are using that to save money. Some people are using that to invest in other places. So the question is, what impact has that? And touching base on that, it's not complete forgiveness of those payments. You do have to pay it back one way or another. And the three ways that are thought is that through higher monthly payments following coming out of forbearance, through a lump sum at the end of the loan term, or more than likely through an extended loan term. So you'll tack on 6 months, 12 months. So the standard is 180-day forbearance. You have the option of a 180-day extension if everything's continuing with COVID-19. So what does this mean for purchasing a home? So we just got recent guidance from Fannie Mae, Freddie Mac, Ginnie Mae, FHA, VA loans, government loans, that if you are currently in forbearance, we are not able to close on a loan. So this means basically someone has to be brought out of forbearance, and also at the same time, to meet the installment loan requirement, you can't have any lates, more than one late in the last 12 months, or DU has to pick it up, which they won't because obviously it's in forbearance. If you missed any payments, we will not be able to complete the loan. So ultimately, forbearance is bad. We don't want to see any forbearance on anyone's credit because in most cases, it's going to mean that they missed a payment and that we cannot complete their financing. So this is very important. We're having this conversation with everybody as we talk with them, making sure they have no intention of going into forbearance. Now, given that if they went into forbearance because, say, student loans are automatically putting in forbearance right now. So you'll get a letter saying for the next 6 months, you're not required to make payments. You don't have the option of bringing it out of forbearance. You can make payments, but it's going to stay in forbearance for 6 months. We will document that you've made your payments for the last 6 months. Same with autos. If for some reason they put you in forbearance, we'll document that you've made your payments. If you've gone into forbearance as a safety precaution, well, we'll have to get a full explanation. We'll have to show that you've made payments and they have not been missed whatsoever. If, again, any payment is missed due to it being in forbearance, we will not be able to complete the loan. So what's this going to mean for the future? Under current guidelines, everyone goes into forbearance if they truly need to. COVID-19 recovers, or we recover from it. Everybody goes back to work. We all turn back to normal. Well, under current guideline right now, we can't have those lates in the last 12 months. And it is expected that the forbearance will still show on credit as past forbearance. So that's the big question. It's being talked about amongst Fannie, Freddie, on big calls that way above my pay grade. So hopefully there's some change there, because right now the thought is, even though someone uses it for a justifiable reason, they truly had a hardship, they've gone back to work, we can document that they've recovered. Well, under guidelines, even if all of that makes sense and we can show that someone can truly afford the mortgage payment again, we can't do the loan. So the other concern is if somebody did go into forbearance unjustifiably, they didn't have any hardship, they didn't lose their job, they didn't have reduced hours. When it comes time to document missed payments down the road, we have nothing to hang our hat on. We can't, under extenuating circumstances, show that, well, they stopped making payments because their hours were reduced or because they had a stay-at-home order, they were furloughed, they had no income for 2 months other than these subsidies and unemployment, and that they have gone back to work, they've gone back to their normal pay, which brings our DTI real low. We can't show any of that. All we can show is somebody stopped making their payment, they didn't have any change of income, they didn't have any increasing income after COVID-19, so no recovery, no stability after an event. Well, then it was basically mismanagement, money mismanagement. So that's something to watch out for. The bottom line is, if you don't need to go into forbearance, it's going to mean bad things for people that are taking advantage of it. And it's going to be a long-term effect. Other thing I want to talk about is under people that are having impact from being furloughed, having reduced hours. We're doing verifications of employment the day of closing. This is something that's happening on every file. If we find out there was any change in employment due to COVID-19, it is causing us to not be able to close on loans. So even reduction of hours, it's causing us to not be able to close on loans. So we have that communication with clients and let them know up front. If there is any change, if you've been impacted whatsoever, it will cause issues. So please let us know, because we will do these checks. There's an affidavit now at closing that is signed by a client. The day they get clear to close, we send out this affidavit. It says you're attesting that you've had no change in employment and income, and that you have no intention of putting this loan in forbearance after closing. If they say yes to either of those, we won't do the loan. So ultimately, we don't want to write a loan for someone that's immediately going to put their loan in forbearance. We are not going to coach anyone on that. We're not going to give them the heads up that they won't be able to get the loan if they answer yes, because we can't. Obviously, that would completely demean the point of the affidavit. So it's something for you to know in case you want to have that conversation with your client. If you have any questions around this, around forbearance, around COVID-19 impacts, please don't hesitate to call me. I'm always here, and I look forward to talking with you. Take care.